this afternoon for the market update. I am David with KCM. We try to do these every couple of weeks. Johnny Moe and I do these, and excited to be back. We were off a couple weeks ago, so it's been about a month since we've done it. And I will say Johnny Moe is not here today. So if you were showing up waiting for Johnny, then I'm sorry to disappoint, but had some technical difficulties. But he'll be back when we do it again in a couple of weeks. So I'm going to go solo today. We're going to talk about all the things that we talk about at Keeping Current Matters relative to what the market is doing right now. Try to give you a perspective, give you things to share with the clients you're serving right now. We're in a very interesting time. If I think about the last time we were together, we talked about where buyers are at, and we talked a little bit about buyer fatigue and just maybe the frustration in some people's minds of trying to acquire a home, trying to purchase a home and losing out on the bidding process. We're going to talk today about where sellers are at, and sort of a front end of a turn in the market that we're starting to see, and being prepared for that. So we'll talk about sellers. We're here at the middle of the year, a couple of weeks into the middle of the year. We've got projections for the second half of the year that I'll share with you. Also, I'll share some headlines that I believe that will be part of the narrative going into the second half of the year. Maybe some headwinds in those headlines that we need to be aware of and we need to be educated on. So we'll do that today, and as always, grateful for your participation. I'm going to do this solo, but I would say a lot of times those that are on live, make comments in the chat, ask questions, still do that. I will try my best to pay attention to that and get the answers to the questions you're asking. If you see something that you have a further question about, please go ahead and ask that question. But I'm going to share my screen, and we'll kind of start off today, talking about sellers, like I mentioned. So give me just a second here as I share, and we will get rolling. So if you think about sellers, last time I mentioned we talked about buyers, starting to see a little bit of buyer fatigue, and buyers saying, I'm not sure we want to buy right now. The market might be getting too hot. Let's see what's happening with sellers. I'll start off with a quote here from a few experts, if you can see that. First, with Odetta Cushy from First American. She says, it looks like existing inventory is starting to inch up, which is good news for the housing market, parched for more supply. I can't think of a better word to use in today's real estate market relative to inventory than parched. We need more of it on the market, no doubt, and we're starting to see a little bit of that come in, according here to First American. Second, from Hawes, we're seeing another significant week-over-week gain in inventory. Great news for buyers. Last, Lawrence Unit NAR, supply is expected to improve, which will give buyers more options to help tamp down record high asking prices for existing homes. So we're seeing from many sources starting to see inventory come back in the market. Now, I didn't come here today to say all of our inventory challenges are over, not that, but starting to say, okay, we're starting to see a shift. We're starting to see some folks come back into the market. If we go to the latest realtor.com map, you can see that evidenced right here. The most recent update to inventory, month over month, grew by 8.8%. And you can see, depending on the state that you're in, how much that grew by. But the majority of the country in that blue tone, lighter blue to darker blue, somewhere between, the majority 10 and maybe 20% in some cases of inventory growth month over month. Now, I think as we look at that, and you're talking to people that sell, I'm going to talk about some seller talking points in just a minute. But if we think about sellers right now, the one thing that I think sticks out to this, and information just published by CoreLogic, is the reality is home equity has skyrocketed over the last year, and a lot of sellers saying, we can take advantage of that home equity. $33,000, just over that, is the average gain in equity of a home with a mortgage on it in the last year. $216,000 is the average equity of a home in this country with a mortgage on it. Let me say that again. $216,000, the average equity of a home with a mortgage on it. That takes off all the ones that are owned free and clear and just counts the ones that have a mortgage. So significant amount of equity in homes across the country. Sellers seeing that equity, saying we can leverage that, and maybe now is the time to go out and and buy the dream home that we want. You go on to see here, 38, just over 38% of the homes in this country are owned free and clear, and almost 20% growth in equity over the past year. So significant equity, and a lot of sellers saying, we can leverage that equity right now and go out and buy the home that we want to buy. Again, George Ratu at Realtor.com said the improvement we saw in new listings growth from May to June shows sellers are entering the market historically later in the season, which could mean we'll see home buying continue into the fall as buyers jump up as new opportunities. So as we've crossed over into the second half of the year, we're seeing sellers enter the market and seeing sellers do that, on a more frequent basis. Now, if you remember last year, we went through the pandemic and the lockdown of March and April and even into May, depending on the part of the country that you're in. And we kind of said summer was the spring market last year. We're seeing something unique here happen where, a lot of the listings that maybe would have come on the market in the spring that didn't are starting to come on the market, pushing that market back into the summer. Now, a lot of reasons for that. Maybe people feel comfortable. Maybe they're looking at the equity. Maybe there's a situation with their job or lifestyle that they say, now we can make that decision. We didn't know if we could before. So those are things we're going to want to watch relative to the sellers. But if I was talking to a seller right now based on all this data, and I'll get all these slides over to you, you can use them as you're talking to people that are like, what, we might want to sell. A couple talking points right now. First, don't be too unrealistic. Is more inventory coming back into the market. Wait really right now, and you'll miss an extremely attractive market if you're a seller. It's never been a better time to sell. And for sure, the last point there, appreciation will moderate as rates and inventory rise later this year. So again, I'm going to go back to where I started from. Last time we were together, we talked about buyers and buyer demand starting to slip. If you remember, I used the home purchase sentiment index, which basically said about 1 out of 3 buyers thought it was a good time to buy right now. So we're starting to see that little bit of a shift with buyers, starting to see another shift with sellers and more property coming to market. Now, I think, nobody's forecasting that we're going to be out, into buyer's market anytime soon, or that's going to dramatically change, but certainly seeing more people saying, what, now is the time we're going to go ahead and sell our home. I want to shift just a minute from sellers to talk about projections, because now, where we are in the year, we're starting to get some second half projections in relative to what the market is saying. And we talk about sellers, them coming into the market. We talk about projections, and I'm going to go over theirs. But one thing that I think we have to think about right now is the perception of buyers and sellers, and really, helping them understand the reality of what's happening in real estate. A lot of times, it's a confusing topic for many people that there are a lot of opinions on whether it's a good time to buy, whether it's a good time to sell. And using data like this to help them with their perceptions, I think are going to help. So let's talk about what experts are saying about the second half of the year. The first I'll start off with are mortgage rate projections. The quick answer here is that experts are forecasting, look here at Fannie, Freddie, MBA, and NAR, all projecting interest rates to continue to rise over the next year. This goes through the second quarter of next year. Now, I don't think there's anybody right now calling for rates to shoot up and to go to a place that causes panic, but to slowly start to rise over the coming months and even into next year. And you can see by the middle of next year, the average of these forecasters, a little over 3.5%. Again, great rate for financing on a 30-year fixed mortgage. We've seen such good rates for the last, over a year relative to long-term financing, and expect those to over time to go up. The second thing is what's forecasted for pricing. We have the latest updates for pricing forecasts. We stay on top of this at Keeping Current Matters. We watch each one of the surveys that come out, whether it be monthly, whether it be quarterly, and always update these graphs so you have the most up-to-date information. But the average of forecasters here 8.9%. And if you've seen us talk about these forecasts, what I always say is the thing that all of these forecasters have in common is every one of them has upped their forecast this year. We started off this year with experts saying we should probably see about 5% appreciation in this country. And now fast forward to today, they've jumped that up to 8.9%, midway through the year, slowly upping it each month, each quarter, whatever their frequency is and how they forecast. What that is due to is the lack of inventory that's come into the market. There was an expectation that in the spring we'd see a lot more inventory. We just haven't seen it, and that's kept that upward pressure on prices. Now, knocking on the door of 9%, 10%, and other areas in the country seeing more appreciation than that, and some markets running hot. And I think all of this is going to continue to fuel that fire of our prices becoming unsustainable. And I think there are some markets we're going to have to look at and answer that question to. But holistically, over across the U.S., the macro U.S. market, we don't see that as being a bubble right now. We see it as a function of supply and demand, but something we're going to keep our eyes on. So interest rates going up, prices going up. You're better off to buy today because it's going to cost more in the future. So we want to keep an eye on that. We want to really dial into bringing that perspective and that data-backed opinion to the clients that we serve. Now, I think the other thing we want to look at is just the overall real estate market this year. And we do have projections on that. And the moral of the story there is home sales are forecasted to increase nicely this year and into next. When we look back to last year, 2020, probably a year in real estate outside of the pandemic that most of us would take over again, meaning the number of homes that we sell. Many people had their best year ever last year. We sold about 6.5 million homes in this country last year. You look at the 2021 forecast, projected to sell in the neighborhood of 7 million homes and equal to 6.5 or better in 2022. So two very, very good real estate markets that we want to pay attention to as we go out and say, okay, what is the next year going to look like? What's the rest of this calendar year going to look like? And experts are saying, we're going to sell a lot of homes, more homes than we did last year, which was a very, very good year. Now, I think the reality of the market today is we will not reach the market potential because we can't sell what we don't have. That's just not an option to be able to do that. And if we can't sell what we don't have, then folks don't get to buy homes. I'm going to talk at the end of this about what's at stake in a very interesting report that's come out. But the reality is we need more inventory, and I think everybody on here today would agree with that. And certainly, it's been the biggest issue in our business for the last year, but even before that. And helping people see, okay, this is what you need to do if you're buying, this is what you need to do if you're selling, and being the expert there is our job today. Now, I think as much as we're expecting a good market in the next year, there will be headwinds, and I want to kind of bring some of that perspective to you and maybe shift to what could be headwinds relative to news items that buyers and sellers see. We always say that keeping current matters, that headlines do more to terrify than to clarify, and that is the truth. The job of the news is not to get you to educate you. The job of the news is to get you to watch more news. It's to bring things that we use the term clickbait a lot of times, and in the world we use those types of things that draw eyeballs, but don't necessarily tell the full picture of what's happening in the particular market. I'm gonna look at my questions here real quick and see if I've got questions that are coming in. Is it going to be recorded? I think it is going to be recorded. That information's in there. So yeah, if you have questions, drop those in there. I've got the questions open and we'll keep an eye on those. But these headlines we have to pay attention to. So I mentioned just a few minutes ago that perception, paying attention to the perception of the buyer or seller in today's market is very important. And here's the analogy I would give you. Whether it's a headline, whether it's something that somebody says about whether it's a good time to buy, whether it's a good time to sell, or what they just really feel. Sometimes battling those perceptions is our job. Now, I'll give you an example. We're here on this live webinar today, but when we end and you leave the office, you leave wherever you're at, you go to get into your car and you go to step off. Maybe you're in an office somewhere. You see a car coming, you step off the curb, but you see the car, and so you step back. Your perception is a car is coming, there's danger, I'm going to step back. And my my action has been informed by that perception. Why this is so critical right now is buyers and sellers' actions are being informed by their perceptions of real estate. Example, if you think I should be buying a home right now, you're going to pull back without having the information that you need to make the best decision. So battling those perceptions is what I want to talk about in some of the headlines we can see. The first headline that I believe we will see is headlines around cash out refinances. Now, this is a picture right here of cash out refinances going all the way back to 2001. And these are cash out refis, people going in, rate and term refinance and pulling some cash out in that sense. The red bars stick out to us, which was the housing crash, 05, 06, and 07. The height of the housing crash, the tallest red bar there, $320 billion processed as cash out refinances. Now, back then, people were really cashing out and financing their lifestyle. They'd go out and buy jet skis, go on a vacation, thinking this will never end. And we know it did end. And we know what happened there in the housing crash. Well, today, I mentioned before, record home equity, people are cashing out. First quarter of this year on the green bar there, $41 billion in cash out refinances. Now, that's a big number, and that number is going to grow this year. If you play that out over the next 4 quarters, that's $164 billion of cash out refinances if we continued on the same pace. And I don't have a crystal ball to say we'll do less, more on the pace of cash out refinances over the next now 2 quarters in the year once we get the data from the second quarter. But let's assume it's $164 billion in cash out refinances. That's what this would look like. You see the little outline of the green bar there. It will be the highest cash out refinance number in the last 10 years. Expect to see that headline. Expect the buyers and sellers you're working on, just see that. Expect them, if they have the perception, I don't know if this market's a good market, and now everybody's cashing out what they have in their homes. I'm nervous. Well, the reality is while that is a higher number and people are accessing that equity and should, couple of things I want to draw out to you. We're nowhere near where we were back in the crash. 320 billion, 164 billion. Big difference. The other big difference, this came from Bill McBride in Calculated Risk. I'm going to read this quote. It says for Q1 2021, the net equity extractions, cash out refinances, was 41 billion or 0.8% of disposable personal income. This is nothing like the amount of equity extraction during the housing bubble as a percentage of disposable personal income. Why is this important? Back during the housing crash, cash out refinances as a percentage of disposable personal income was almost 10%. First quarter is 0.8%. Again, let's multiply that over 4 quarters there, and we certainly are going to see, I think, that number grow nowhere near 10%. So some big differences that you'll want to be on top of as your clients and as people that you're working with bring this up. Because they bring them up because they see the headline and they think, gosh, that didn't look good. That doesn't sound like that's good. And it sounds like here we go again. So be aware of that as we head into the second half of the year. The second piece of headline that I think we will see, no doubt, is the significant increase we've seen across the country in the average monthly mortgage payment. So let me break this down. This will look going back to April 2020, the average monthly mortgage payment hovering there around a little over $1,000. January of this year being just over $1,000. You can see it. As of April, almost $1,200, almost 20% jump. Okay, why is this important? One, we're going to see, again, you're wondering, is this the right time to buy a home? You see cash out refinance is high. You're going to see as well, mortgage debt is growing. Average monthly payment is growing. Here we go again. Well, what do we know has happened in the last year? Two things I would draw you to. The meaning of home in the last year has grown tremendously. You know, we've never seen a time in my lifetime where people said what we want in a home and what home means to us has changed. What you started off 2020 wanting in a home and what you finished 2020 wanting in a home changed for just about everybody. We ate there, we worked out there, we went to school there, everything. People said, I want a bigger backyard, I want this. We know that happened, no doubt, across the country. The second thing we know is people today and over the past year have been willing to pay for what they want. They've been willing to say, you know what, I'll spend a little bit more if I can get a little bit more room. I'll spend more if I can get this that I want that I don't have in my home. What has that caused? Even with low interest rates, it's caused mortgage payments to rise. And that is directly due to the impact of home on people's lives. Keep that in mind because that will come up and you're going to want to bring that perspective and even a chart like this to show, okay, yeah, that is happening and here's why that's happening. I think the other headline that we can certainly expect to see are headlines relative to affordability. Over the past year, affordability has been something we've talked a lot about at Keeping Current Matters. Now, I always delineate between affordable housing, which references homes on the lower end of any market, and housing affordability, which references what the dollar will buy. And I'm not making any case that we need, we definitely need more homes on the lower end of just about every market. That's a critical issue in this country. We need more homes that people can, can purchase. And in just about every market, there is less inventory in that category. Think about it for the first-time home buyer than any other category. But when we talk about what the dollar will buy, that's been in a very good position because it's based upon three things: home prices, interest rates, and wages. Prices have been going up, interest rates have been going down, and wages have been going up over the last year. So the growth in affordability due to wages and low interest rates have offset the growth in price. But as we go forward, interest rates go up, prices go up, wages will continue to go up, but they will not be able to offset the affordability equation in this country. And it will be challenged before it gets better. But I want to break down affordability to you with this graphic that I have up. It's the NARS Housing Affordability Index going all the way back to 1990. So I would expect to hear from someone, hey, houses just aren't as affordable today as they've been in the past. The first question you want to ask them is, as compared to when? Now, as you look at this graphic, the way you read it is the higher the number, the higher the bar, the more affordable homes are. Now, what sticks out to you are the yellow bars in the middle there. Those are the years that distressed properties dominated the market back in the housing crisis. And homes were very, very affordable then because we had an oversupply on the market and homes on average lost almost 20% across the country. Very, very affordable. Okay, where do we stand today? The blue bar on the far right. So if you were to look at this, you were to say, okay, houses just aren't as affordable today as they've been in the past. Well, as compared to when? The last 2 years? Yeah, I would agree with that. I would say houses aren't as affordable today as they've been in the last 2 years. 3 years ago? Well, they're actually more affordable today than they were 3 years ago. Well, time going back to the housing crisis? No, they were more affordable back during the housing crisis. Well, prior to the housing crisis, going back to 1990, they're actually more affordable today as a component of what the dollar will buy. It's important to be able to bring that perspective. Again, what we always say at Keeping Current Matters is give clients the truth and trust their intelligence. and I do believe the headline and the article and what's put out there will be affordability. Homes aren't affordable, and whatever kind of hysteria can be generated relative to that. But understanding affordability is going to be critical in the second half of the year, because I believe it'll be a topic that will be talked about. And whether it's cash out refinances, the jump in mortgage payments and debt, or affordability, all of that is going to pour gas on the fire of, are we in another bubble? That's what we're working against. And thankfully, we see a lot of media reports that say this isn't a bubble, but expect that to continue on to say, okay, maybe it is a bubble. Expect that to happen. The Joint Center for Studies on Housing at Harvard University just released their State of the Nation's Housing this year report. Great report if you want to go back and read it, but I clipped this quote out of there. It says, these outsized increases have raised concerns that a home price bubble is emerging. They're talking about outsized increases in prices. However, conditions today are quite different than the early 2000s, particularly in terms of credit availability, meaning the ability to qualify for a mortgage. The current climate house prices instead reflect strong demand amid tight supply, helped along by record low interest rates. So here's Harvard University saying, it's not a bubble. This is a supply and demand issue. And oh, by the way, interest rates have been low and everybody's trying to buy right now. So my hope is that you'll be able to use those graphics and all of that information as those questions come up and to talk through those. So Dave Perry, how do you calculate the housing affordability index numbers? That's a report that comes out from NAR. Now, Dave, if you go into Keeping Current Matters slides, in the notes section below any of the graphics is a link back to the most current report, where you can see the methodology for calculating the report, and you can see historically where it's been. So on any of these reports, like in this Joint Center for Studies from Harvard, the link to this report is in the slide. And if you want that slide, feel free to email me, David at Keeping Current Matters. I'll get them to LabCoat as well, so they can get them out to everybody. But all the links to all those reports where they talk about how they calculated the methodology and all that's included in there. Great question, though, when we get a lot. I want to kind of wrap up here. We've got a couple of minutes till the bottom of the hour. We try to keep these to half an hour to make the best use of your time. I want to talk about what's at stake right now. We've talked about, sellers, a little bit of, what this year is going to look like. This is a topic I don't think we're talking about enough in our business right now. And, somebody thinking to buy a home right now may think, my perception is not a good time, so I'm going to wait. Let's talk about what's at stake. The home price expectation survey for the second quarter came out and forecasted appreciation for the coming years. You can see here 2021, 8.66% appreciation, just over 5% next year, settling into a more normal appreciation number in 23, 24, and 25. Historical appreciation in this country is 3.8%. Healthy appreciation going forward. So what does that mean? It means, what's at stake right now is buying and then the ability to earn equity based upon that. If you take the average home today, and I'm going to use $350,000 borrowed, what's at stake in equity growth over the next 5 years is over $93,000, almost $100,000 in equity growth for somebody that buys a home now. Now, the reason I say this is what's at stake, because I think there's a question in a lot of people's minds. It's coming in survey data. I think you're seeing it with people that you're working with. They're wondering, should I continue looking for a home? Should I continue this hunt in trying to acquire a home? And the answer is, if it's right for you today and there's not some other extenuating factor, you absolutely should. I believe more homes, and we're seeing the data, are coming on the market, and what's at stake in equity growth and building equity for individuals and families across this country is significant. So, as always, I enjoy doing these bi-weekly webinars with LabCoat. So grateful for the way they support what we do at Keeping Current Matters. And our goal is to equip you and give you the resources you need so that you could be the trusted advisor, the educator in your market. The company of Keeping Current Matters was founded upon a quote from Dave Ramsey when he said, whenever you're looking for advice in a major decision, whether it be real estate, insurance, financial planning, look for someone with the heart of a teacher, not the heart of a salesperson. And that's our goal for you, is to give you the information you need, educate your clients where they can make the best decision for them and their families. So Johnny Moe will be back with us in a couple of weeks. Grateful for your investment in the last half hour with us here, and we'll wrap on that, and we'll see you back in a couple of weeks. Take care.